Hey, Sean, how you doing?
I'm good. I'm not sure people who would be, if we were recording in real time right now, I'm not sure most people would want to answer that way if they're listening to this podcast because the markets have kind of blown up or blown down, or however you want to say that. All kinds of dramatic uh, adjectives and verbs and stuff are floating around the markets this week.
Yeah, it's interesting. I got a call from my brother-in-law yesterday, and I've gotten a couple of emails. And there's definitely, like, having watched the markets for 30 years, when you get the email from that person or that type of person, um, or you get a couple emails like, should we be doing something or shouldn't we be doing something, or how come you're not doing something, or something that has that type of theme, like, shouldn't we be getting 2 weeks of water rations, and how come you're not at Costco, and school closure alerts coming.
Why aren't we all in cash? Or
Yeah,
should we be all in
or
cash?
should
Or
it
do
be all
we?
in cash? And it's just, I don't want to make people wrong, but there's a point where when you move from crisis to crisis and then to the next crisis, it's like, at what point can you not notice that you're just moving from one crisis to another crisis? And so I want to talk about this more of just from it's just another crisis. And I kind of want to frame it that way. Yep. Here's the next crisis. I don't know what the last one
Mhm.
was because I don't really follow crises. Maybe it was Trump or trade war or tariff or money printing or negative interest rates or share buyback, or Bernie Sanders said something. Like, I don't know what it was. Um, but don't people get tired? Like,
Apparently not.
apparently they don't. Um, and I don't want to come off self-righteous. So, but what I want to do is I want us to jump to price charts. We can talk about price charts. Specifically, I want to talk about a lot of Chinese price charts.
Hmm.
Um, and having spent a week in Wuhan, China, when I was 19, and having been an Asian studies major and spending a lot of time in mainland China, um, I think I do bring a perspective that most people can't or aren't able to, who have no idea how China actually operates and works. And the only thing they know about China is either what they've read,
Hmm.
or maybe they're on some 9-day tour in China. And so they saw what the tour let them see.
Yeah. So just to be clear for the people listening, as we're recording this, the coronavirus is all the news right now. Like it's front and center. And to be fair, RC, because this does feel from a investment stock market different than the trade wars that were maybe a month and a half ago. Because I mean, the market has taken. I mean, it's let go of what I don't know. I'm looking at the finance.yahoo on my other monitor, and it's at 26. The Dow's at 26.4. S&P's at 3,059. So it's taken
Yeah.
a noticeable.
I'm not saying the market didn't fall.
Right. So, but it seems like it's falling more and faster if I'm in the moment. So I'm going to be the voice of the people here for a second. RC, oh my God, it's fallen like 5, 6, 7 days in a row now. Like,
Yeah.
and lot, like 100 points or 50 points or 8% total. Like, oh my God,
Yeah.
shouldn't we be doing something?
Yeah.
So it does feel a little bit different. I totally get
So
the
yeah,
crisis to crisis. So
let's have this conversation as I have a price chart on the screen.
right, and that's the first step, right? Okay, we got all this information coming at us from the media about coronavirus and the stocks falling and all that kind of stuff. So if you're not into stocks, you just hear stock up with water, don't fly, all this other stuff. But if you're
Yeah.
also an investor, you get this double dose of coronavirus, how it's affecting the stock market,
So
like just in stereo.
Yeah, I mean, the
The
first
world is
problem,
coming to an end.
every investor's problem starts at the exact same place every
Right.
single time. It started at the exact same place. It's starting at this exact same, and it will start in the future at the exact same spot. And the spot that every problem starts is with not being trained to filter information properly.
Right.
Every single problem. I don't care your IQ, your income, your age, your orientation, where you live in the world, who you vote for, whether you believe there's a God or not. Every investment problem that's ever happened to you has originated and started in the exact same spot. And that spot's called, I don't know how to filter this information.
Hmm.
So can you see my screen?
I can.
So this is a 3.5-year price chart of the S&P 500 index.
Okay.
And it's got 3 lines on it. I can actually, let me even make it simpler. Let's just make it even simpler. There's 1 line on the screen, and that's the closing price of the S&P 500 index. This is the index I follow. I think it's the most important index on the planet, certainly stock index on the planet. And so here's 3.5 years. And from a student of price, I study price.
So can I just jump in here and say something?
Yeah.
So first of all, I got to tell you, just you pulling up this chart, like, I feel better. Like, yeah, the final, the line on the upper right is going down, but like, oh, it's not down as far as the news told me it was, like, or made me feel like it was.
Yeah, I mean, if you're not trained to filter, even know how to do that,
Mm-hmm.
I mean, literally, you're living in your amygdala and your limbic system, and you're living in fight and flight. And it's a really scary place to live, especially if you want to invest your money properly. But look, let's just start with a 3.5-year price chart and go, okay, got it. Black line sometimes falls. When it falls, there's going to be scariness around it. And I know you know this, Sean. I'm not diminishing people for being scared, but scary news comes out a lot. Like, here's 3.5 years where there was scary news. Now, all the news that came out, the stock market didn't think it was scary. But, go back to the beginning of 2018 right here. Here's this, right? So most people don't know this, but on January 22nd, Donald Trump did his first trade war tweet. And then 2 days later, the market peaked and it fell 10% in 8 days. It was 8 or 9 trading days. Oh my gosh, like that, that's big. This fall was a 10% fall that happened in less than 2 weeks. That's less than 10 trading days.
Okay.
And so what do we got here? We've got 9%, 9.8%. Okay. And again, this isn't me diminishing. I'm just, when people don't have perspective, they panic. And I believe people have been taught to panic.
Right.
We've been taught to panic. We have screens on our wrist, in our pockets, in our bathrooms, in our cars, in our fam rooms, in our bedrooms. And on those screens are things that create a crisis. And so,
and let's be clear, like, and this is not conspiracy theory. Like, this is intentional to get you to hand over decision making to someone else, a professional.
Well, think about it this way. I'm going to get the numbers off, but you'll get the point. There were 60,000 engineers at NASA in the 60s that put a couple guys on the moon.
Okay.
Smartest people on the planet figured that out. Today, those people, there's not 60,000 of them. There's 600,000 of them, and they work for Google and Facebook and Netflix, like Microsoft, Apple. They don't work at NASA anymore.
Right.
Like you literally go, I mean, I live in a town that's the second or actually it's the third largest location for Google on the planet. And you meet these people like, oh yeah, I'm a nuclear scientist. Oh, you work for YouTube. Oh, okay. But for real.
Yeah.
And so when we just start with this price chart, look, that drop of 9 or 10% that's happening right now, super scary. I'm not saying it shouldn't be scary. But it's out of context when people are just running around like, in the National Lampoon movie, oh my gosh, what's the 1977 movie? John Belushi.
John Belushi?
Yeah, John Belushi was in it. He's the one that died, right? Animal House? Animal House. When everyone's running down the street panicking.
I had no idea where you're going with that one. But.
Okay. It's like people are just freaking out and panicking.
Yeah.
So first of all, I'll just say this. As long as the price stays above 3,000, I personally, to me, it still is just noise. I'm not saying it won't fall below 3,000, but if it stays above 3,000, then it's hard to really think there's contagion in the stock market.
Mm-hmm.
So one of the things people are never trained on is to say, well, let's put some worry points in, or let's figure out at what point we should worry. Like, let's figure out if we're on a highway, at what point should we realize we're heading in the wrong direction? When the road just kind of curves? No. When maybe you get off at the wrong exit and you start heading in the wrong direction. Okay, but for how long? A minute, an hour, a week, a year, 10 years? So this is not a crash, meaning I do not believe this is moving into a 50% crash. There's no hallmark of that. I've studied every crash the last 120 years. This does not have that feel right now. Obviously, corrections do turn into crashes, but as of right now, this doesn't have that feel to it. This could be a 15% correction. It could even be a 20% correction. But as of right now, I don't see this turning into a 50% correction. And there's a couple of reasons why, and I want to talk about it, and I want to talk about it by leaving the US and going to the second largest economy on the planet, which is also known as China, which is also known as the place where the coronavirus started, and the other two coronaviruses. I believe all three coronaviruses in the last 20 years all started in China. I forgot the name of them. H1N1, I think, was one. Right. And the bird flu one, maybe the H1N1 was the bird one. But one was 2003, one was 2012, and now here we are at 2020 with another one. So this is the Chinese stock exchange, the Shanghai Stock Exchange. And to me, what's really interesting is, and let me maybe zoom in, but actually I won't. For February, the Shanghai stock market is up 8.7%. So that's interesting. Now, and then I was just curious. So I wanted to dig around other ways to measure China. And here's basically the NASDAQ of China right here. And this, I see no panic happening with the NASDAQ of China. I then went over to, again, I picked some up. There was no, this is a China Biopharma ETF. That's looking downright awesome. It's got a little bit moved down, but that's a lifetime high right there for the China Biopharma ETF. Okay. Then if we go look at this one, this is another way of measuring China, the Van Eck Vectors China AMC SME. That's quite a mouthful, but that's looking like it's breaking. It's, moving higher, and it's moving higher. It's got some resistance up here, but that's moving higher. I don't see a pandemic happening on these price charts right now. I see this drop down, but I see it drop down within, and we can go back to the Shanghai Stock Exchange. You see volatility in this thing going back 3.5 years. Like, there's a 33% fall here, right? And then it went up 33%. So there's been volatility in the stock market for years and years and years. Now that's avian flu right there. Sorry, that's COVID-19 right there. But I'm not seeing China imploding right now, which gives me pause. Like, well, if a country was to be imploding, shouldn't China be imploding? I mean, for God's sakes, this is the Chinese healthcare ETF. This is Crane Shares MSCI All China Healthcare Index. That looks beautiful.
Yeah.
The one thing I thought was interesting was there's a company called China Online Education Group. And I thought this was a little funny that the China Online Education Company, I mean, this is all speculation, by the way, not my opinion, but what's going on. I don't think the China Online Education Group all of a sudden went from being worth, $7 on the way down to $6, and now it's worth $35. I think these people are just reacting to, oh my God, if no one can ever come outdoors again and ever go to a public education, we better have some online course stock. And so there is panic going on. I'm not diminishing panic or making fun of people. I'm just simply pointing out it's panic. And when people are on their heels or are reacting to other people's reactions, who are reacting to other people's reactions, then the behavior's probably not going to be that good. So there's two things going on. Either the outbreak has been contained in China, right? Because China is an interesting country, right? No one's elected in China. They can say, okay, no shops are open for a week, or no one's going in and out of these 7 cities. I don't care if there's 5 million people in each city. Okay, no taxis run for the next 3 weeks. Like, they can just make these statements and no one's going to fight them. So what's interesting about China is they're probably better able to fight outbreaks than probably any other country on the planet, which is interesting because there's 1.4 billion people there. But because they can just say, nope, no one's going outside. You go outside, you get arrested. Well, like Italy can't do that, right? So here's Italy right here. And the reason I brought up my my brother-in-law at the beginning is he called me, and he works in a big company. And I was just like, oh yeah, I'm not around other people. I forget that you got to deal with that. But here's Italy right here. Supposedly the outbreak is happening in Italy right now. And look, that drop looks pretty real right there, but I don't think it's any more real than any other country. That's down 9.7%. If I were to pull up the German stock market just for reference, this is Germany, and this is yesterday. But still, it gives a reference. Germany is down 7.3%. I want to get clear. So look, either China resolved the problem and we're already on the mend, but we don't know it yet, or the Chinese government is buying a shit ton of stock. And they're just gobbling up tens of billions of dollars of Chinese shares. And that's why they're not falling. I actually believe that China's figured out how to contain it. And it's been contained in China. Now, is it contained outside of China? I don't have that answer. But just based on looking at the price charts in China, I believe the coronavirus has been contained within that country. And again, I think that's partially because of the unique nature of being a country where officials are not elected, they're appointed, and they can just shut down entire cities.
So the question I think that might be coming up for people at this point is, okay, you've shown me that maybe I'm overreacting to the news and the information that's coming at me. I need to learn to filter that information. But okay, how do I know when to do something? Like I'm sort of feeling better, but like I've still got this anxiety about what about tomorrow? What about the next day? What about the next day? So how do you answer that for people that I feel better, but I'm still a little worried or nervous or anxious about the downward trend? Or would you even call it a downward trend? Is that a false belief there?
Well,
Like,
so the first thing is if someone has a newsletter or is reading emails from someone who's like a day trader,
mm-hmm,
or if they think in hours or days or maybe at the most weeks,
mm-hmm,
right? So for those channels, this is, horrendous, right? Because their view, let me just do this. So if they're getting information and news from someone who looks at the world, I mean, this is months if I do. And I'm not diminishing these people, but if this is where they're getting the news from someone who's looking at this and this is the only picture they have, that looks pretty scary to me too.
yeah,
Like that looks like bad shit's happening.
right.
Right. So, and I think a lot of times people don't get the context of who's giving them information. Right. So maybe this is all they're looking at with their stock chart, with their account. Like all they know is their account balance over the last 5 days. Right. And this gets back to perspective. I mean, the question you ask is a hard question to answer. The way I want to answer it is, and it's going to turn people off. The answer is you get trained so you know how to filter information. And once you've filtered that information, the next step that goes to is how you feel about that. It goes to our emotions. And no one's been trained to identify or manage their emotions when it comes to money. I mean, it's not something that's done. But in answering your question, so if a lot of people, if this is all they're looking at, then that looks pretty scary to me. Right now, that
if you filtered the information incorrectly, then going through the three pieces, you're going to bring up or identify some emotions that will create a certain set of actions that you take, as opposed to if you filter information with the first chart you gave, it's a different emotion, different action, which may be no action at all. And I think that's something that's really hard for us in today's world, is that no action is an action. And sometimes the hardest action to take.
And that no action could be the wrong action or it could be the right one, right? The person who doesn't take any action in the 2008 global financial crisis and they watch their account fall 57%, that was clearly the wrong action.
Right.
So it's funny. It's a spectrum. On one end of the spectrum is day traders, and then the other end of the spectrum is buy and forgetters.
Yeah.
And so an extreme of any spectrum is dangerous. And I often find the best place to live is just right in the middle. Look, there's times where you should do something. Most of the time you shouldn't, but there's times you should do something. So I think a lot of what's going on is people are looking at this, whether they're looking in their accounts or they're just seeing this move down. I mean, this is, let's see, Thursday, Wednesday, Tuesday, Monday. So there's Friday. So lifetime highs, I believe, on the S&P happened, Thursday, Wednesday, Tuesday, Monday, Friday. So last Wednesday, the S&P was at lifetime highs right there. And then Thursday, it was down a little bit. Friday, it was down a little bit. And then Monday, it opened. Tuesday, it cratered. Wednesday was a bit of a pause. Thursday, today is extremely scary. Like intraday, like from the very, very high of that Wednesday to the very, very low of today, like if someone's living in that, that's a really scary place to be living. I mean, that's 11.4% lost in 6 trading days.
Yeah.
And I think what's happening to a lot of people is their filter is completely open and they're just letting in just crisis after crisis after crisis, and their adrenal glands are just drained. They're just drained.
Yeah, if you're watching CNBC or MSNBC, whatever has a ticker scrolling across the bottom and it's all red, like, I mean, your brain is like, red, oh, that's not good, that's bad, oh my God, I should be doing something, like, and it creates this like cycle. So just I
mean, my heart goes out to people who have 10, 20, 30, 40 symbols and 10, 20, 30, 40 symbols are all bright red, and they've been bright red for 5 days, right? Because they're getting hit with 50 times of fear than's really necessary.
Yeah, their notifications are going off on their phone that their E-Trade account is, whatever, like however they got notifications set up, or you get, stock alerts and, from CNBC or whatever. It's just, it's very hard it's impossible to be objective if you're letting all that in.
And I just want to compare this with something. So this is the energy sector. So there's 11 sectors that make up the US stock market, 11. And this is the energy sector. So this is scary. This is what someone should be scared about. This is what someone should be having a pandemic-like reaction to, right? But it shouldn't have just happened 5 trading days ago. Like, this is a horrible looking price. Now, if you own the overall index, you own part of energy. Energy is a very small part of the overall market. But I guarantee you there's people who are in energy and have been getting into energy because energy is a deep value play and it's getting a deeper value play. And man, look at there's got to be some great dividends in here. Like ExxonMobil has a high dividend, right? ExxonMobil has a high dividend. It does. And people get triggered. I think the reason why people are mad and sad and angry is because someone told them to get on this price chart, to get on this price line. And the way they told them to get on this was they used these magical words. They said, dividend,
income,
dividend, income. Been around. I don't know how long Exxon's been around. 100-year company, dividend, income. The dividend is up, income. And what happens to the brain is it goes, well, I need to be safe. I can't run out of money. I can't go get out of retirement. Once I'm retired, I want to stay retired. Once I'm 55, I would like to stop working at 60. I got to transfer that stability to the growth, the accumulated saved money. But because they've never been trained, someone says to them, dividend income. Oh my God, I need dividend income. Yeah, ExxonMobil. You got to get Exxon. Oh, of course I do. Oh my God, of course I do. And they pay someone $10,000 to write up why dividend income is amazing, and they end up buying this piece of crap. This is what gets me mad. Like, this is what people should be pandemicking about. And this is probably the largest stock. I'm guessing here. I don't think this stuff matters. It's probably the largest stock in energy, I think.
It's also one of those name brand stocks that is in, endowment funds and portfolio. Like, it's in everything, because it's one of those big safe companies.
Yeah, look, if you own the S&P, you own a little bit of this, but it's a tinge of it, right? I mean, this is ExxonMobil, and if we just divided by the S&P 500, like, oh dear God, right?
So when you say divide by the S&P 500, you mean how it performs against?
Yeah. So if the black line is falling, that means ExxonMobil with dividends included. So it includes dividends, how it's performed against that free stock market rate of return called the S&P 500. So look, if you wanted to own Exxon between 2000 and 2009, high five. That would have been a smart time to do it because it was outperforming the S&P.
Mm-hmm.
But for the last 11 or 12 years, ExxonMobil has been making people poorer. And this is not an opinion. It's actually making people poor. They could have bought USA Inc., which is a $20 trillion, 250-year-old company.
Right. So I think we should go into this more on the next episode. We've got a list of stocks that somebody posted online that we could talk about. So I'd love to go into that deeper. So let's wrap up and give a kind of a summary of, okay, we're in the middle of this coronavirus. The last 5 days, we're down 9%. It's like, okay, what do I do? Tell me, money man, what do I do?
Get trained. That's not the answer people want to hear. So
It doesn't matter. I mean, if that's true.
So the answer is you got to get trained.
Yeah.
Like this is a price chart. I didn't even think about it until now, but this is 10 and a half years. This is 10 and a half years. So look, you just got to ask yourself, how have you done the last 10 and a half years? And if you move from panic to panic to panic to panic every time that little black line falls, even here's the thing, it doesn't even need to fall. I believe this was Trump getting elected right here. Like it barely even fell.
Also known as the end of the world for half the country.
Yeah. So end of the world for 52.3% of the country. And so, and it doesn't always need to go here, Sean, but the answer is if you're not trained, you're going to have sleepless nights. You're going to have anxiety attacks and panic attacks.
And even if you gave an answer for today's crisis, this
it wouldn't
week's
matter.
Crisis, you'd still, it may not be the same answer for next week's crisis or the week after or the month after. And we're in an election year, so who knows what's coming out this year? Like,
and what's interesting about this year, and we'll hit the pause, but what's interesting is the incumbent is very clear that he wants the stock market to go higher, and he will actually do everything he can to make that stock market go higher.
Yeah.
He has to, because he actually thinks the stock market is the economy. Like I don't think he knows the difference between the two. So he often talks about the stock market when he's talking about the economy. It's like, it's not the same thing, brother. Like the bottom 90% of this country is not doing well. So it's interesting to me from a curiosity that we've got an election in November. So that's what, 9 months from now. Maybe it's going to be two old commercials. It's going to be two old white guys against each other. It's a lot of commercials between now and then. That's what the old white guy. Isn't Bernie from New Hampshire, or is that someone else?
Vermont.
Jesus.
Got a little summer cabin up in Vermont.
I'll say this: people were taught that it was their civic duty to watch the news.
True.
That's their civic duty. And when I stopped watching the news in the 90s, my mom got mad at me. And it took me a while to figure out. And I was like, oh, she thinks I'm not being a good citizen.
You're not being informed. You're not staying informed.
Like I'm not being a good citizen. And I think that's no longer true, because news is not news anymore. News is entertainment. Entertainment is news. It's the same. I mean,
yeah, we could go into a whole episode on that.
So just to wrap it up, it's really to get trained to know how to filter it out. And the thing I'll leave with, if people don't like that answer, is, look, we may not stay above S&P 3,000, but it's hard to get worried if we do stay above S&P 3,000. And with Chinese stock market, all the different ways of measuring the Chinese stock market, with that doing well, it's really only two things. Coronavirus is done in China, or the Chinese government is buying stocks. It feels more like it's done. So the next question is, if it has moved outside of China, it has Italy, I guess, then, watching that stock market.
Well, we've got Super Tuesday coming up as we're recording this. So that'll be a new cycle. Thing. Now we'll know kind of who the head-to-head competition is going to be. And, Trump will start tweeting more aggressively towards that person. And we'll have a whole new news cycle that we'll be able to worry about. So don't worry about worrying about this. We'll have something else to worry about soon.
Yeah. Thanks, Sean.
All right.
Bye, guys. Thanks for tuning in.